Okay, welcome everyone. There we are. New live stream. Same probabilities though. Okay. There we are. Up. 1 second. Webcam. Webcam. Where are you? Let me fix that quickly. There we are. Make sure to turn this on. Okay, I'm just here making sure that there we are. Perfect. It's interesting that it was telling me that my webcam was connected to a USB 2 port, but I actually don't even have USB 2 ports on this laptop. So I just plugged it out, plugged it in, and here we are. It works. So welcome, everyone. Good to have you here. Another day, another live stream. And let's cover the probabilities on Bitcoin and the Elliott wave scenario, shall we? We will zoom out for the sake of creating an overview before we jump into lower time frames and what we are looking for. Still haven't touched the blue box. It's not a necessity, but it remains higher probabilities. But we will cover that towards the end of the analysis when we talk about the lower time frames. So welcome, everyone. What's up, Guilian? Engine Tour. Good afternoon from Coquitlam, Canada. Well, I never heard of that place, Coquitlam. But welcome, man. Other side of the world. James, welcome. What's up, BH Trader, Ziggy, Mark, Florian, Zoltan, Snahalata, welcome. Christian, what's up? The Mahala Workshop, Obelix, Giannis, Christian, Driftholics, Zendra, Divinehood. What's up, everyone? Welcome. Milo, good to have you here as well. Let me pour a little bit more water. I'll probably need it. Yo, before we jump into analysis and stuff, like if you're regular here, you know that at the beginning of the stream, we regularly talk about all sorts of stuff. And also experiences and things that I'm doing. And maybe, for some it might be useful, so for some it may not be. But what I started doing is, like since this morning, is I got myself a notebook. Obviously, it's nice and green. And I started bullet journaling. I'm still setting up the pages. But press 1 in chat if you do bullet journaling, yes or no. I'm actually quite curious. So I've been making my my first page, which is like sorry for my writing. I used to become a doctor. Wait, so I have my key icon, like my the bullets and the signifiers, and now I'm working on my yearly overview page. Which your yearly overview page already finished, and now I work on my goals page, and then the goals page will have like health related, business related, and other things related goals. And then I want to go into a monthly page where I also then have a goal tracker, that stuff. So I'm just curious if anyone actually does bullet journaling or not. I got in touch with it through YouTube, watching some videos, and eventually I stumbled upon this. And I like self-development type of stuff, and that is why it appeared in my recommendations. So I checked it, saw the video, I was like, interesting, let me try it. So yeah, I want the Kunz hat. Merchandise is not yet there. Like the website is not far from being finished, I think. But then we need to connect store and that sort of stuff. But it will come. By the way, talking about merch, actually, friends of mine made a really, really cool design. Let me see if I can actually find this. So they made a design for a sweater or like a sweat or hoodie. And let's see if I can find this design, and then we'll start the analysis. Where are my pictures? Photos, 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 photos. I don't know. Maybe probably my phone is not connected at the moment, but let me go to my photos. I'll just show it like this. Checking. There we go. So I gotta do this. So it's from my phone, okay? Like, but first of all, so one of my friends, he's very good in Photoshop and stuff. So what he did, that's my wife, by the way. So he made these sweaters, and look at the raccoon in the back behind the O. And then at the front, he made this. So it was a quick pick, right? So sharpen. So Kunz Trading. Then you have the raccoon, the logo on the side, like on the here. But also, and you can't, maybe I have to zoom in to see it. But this is a 100K sweater. So he literally copied the chart. It is the Bitcoin chart. That is the 15K low, and he then put this on a like shirt, sweater, hoodie, whatever, and he gave it to us as a present. It's a nice present. So yeah, that's really cool. Talking about merch, that's fun stuff. I wear it all the time. Actually, I wear it on a couple of streams and videos as well. But generally the webcam cuts somewhere here, so you don't really see what's down below. I could be streaming in my underwear for your sake. So first time I've heard about it. Yeah, it's really big, really big. Like I like to keep it simple. I don't want to make art. I'm not a good artist or like a writer. I just want to. It's for efficiency, journaling. In the 1 hour, a volume candle is missing. Yeah, true. The Coinbase chart wasn't working for a short period earlier. You could make a journal and sell your own version. Yeah, needs to be something unique though. But if I would go into having a journal in a merchandise store, then I would probably specify it towards Elliott waves or something. Like the theme of the channel, so to speak. It's a fun idea though. Yeah. I'll be in line for your swag. Cheers, James, man. Matter of time, it will be there. Raccoons are the best. Yeah, raccoon, because my name is Kun, it eventually got a bit of a mascot of the channel. So, let's start. 14 minutes in. We're going to start on the higher time frame, and then we zoom into the lower time frame. Okay, that's the plan. Higher time frame, let's start with the 4 hour, daily 4 hour. Now, Tradingview, and maybe for some of you as well, I have seen messages in Discord that Tradingview is not running very smoothly for, unfortunately, many people, including myself. So this morning, first of all, the Coinbase chart wasn't working for a period of time. And when I want to switch time frames, I checked it before the live stream. It's still struggling sometimes. So it may be possible we have to move to another chart. In that case, I have other charts here. So we'll go to the index chart, and then I will just count it there. So I know the counts anyway. So we may as well. Yeah, okay. So we go to another chart. This chart works. And I do have stuff here, but this is all old, to be honest. So the 1 hour here, this is all irrelevant. Can remove this. This is irrelevant. I don't even know if the weekly stuff is still relevant, but macro. Okay, weekly stuff, we can remove that as well. There we go. Okay. Do this, copy it up, and there we are. So let's cover the 4 hour first, right? Do a little bit of a run through. Of course, I covered this time frame 2 days ago in a lot of detail, so I won't really go in a lot of detail. But I will at least explain what we're looking for. Wait, you filled in? No, at the moment you filled it in and it's seen the OG, you immediately get access to Discord. There's not like a separate email just to confirm that. So you will automatically see the channel in Discord. Let me see, by the way, OG. I don't know what your name is, either on Discord, Thomas Sorlik or Flybaby. But in both cases, if you are here and one of you have that name in Discord, Thomas Sorlik or Flybaby, in both cases it didn't work. Thomas Sorlik on Bybit, I couldn't find you, so probably you made an account but not with at least the link of the channel. And Flybaby, the exchange is not listed, but that's the point, because you got to register with the link that supports the channel, which is an affiliate link. Yeah, probably if you're Thomas Sorlik, then the account was created, but not according to a Koens affiliate link. And it's about supporting the channel. But also I don't actually have a Bybit link anymore. In very old videos, you'll find a Bybit link. I can share it if you don't want to change to another exchange, but then you need to make a new account. Of course, Blofin is eventually in the back in the day Bybit, but nowadays for already a long time I trade on Blofin. Okay, let's get this. We'll get to the question and stuff afterwards. So new chart, this one here, fresh one, index chart, because my Coinbase chart is not working. So on the 4 hour time frame, pretty much the daily time frame, I suppose. Let's zoom out. The probabilities are higher. We're still looking for upside. So it's a little bit of live analysis, even though we know or at least I know the analysis and many of you know what we're looking at. But your bullish scenario is twofold, right? This is still what we're looking for. The bullish scenario remains a higher probability scenario where we do not yet have a finished wave 5. Now, this wave 3 can either be put on this high or this high. Depends a little bit how you want to count all the sub-degrees. It's just that the result is exactly the same. If you put this wave 3 on the left, then you can count either a finished WXY or ABC at this low, preferably that's then the end, and you look for price to continue towards the upside, right? And then you need an impulsive move to begin with to create a wave 1, 2, 1, 2, 1, 2, and then 3, 4, 5, 4, 5, etc. to finish 5. Alternatively, you create a bigger triangle, A, B, C, D, E, running triangle up. You just continue the range. For this scenario, not allowed to take the low. On the other hand, you put wave 3 at the high, wave 4 not yet finished, and you look for a bigger sideways ranging structure, and then eventually you move up for wave 5. The result is exactly the same. The price action, especially on the short term, is very likely going to be extremely similar. But in both cases, the probabilities remain higher for the bulls to look for upside, right? So look for corrective stuff and then eventually continue its way to the upside again. Now, if wave 4 is not yet finished, outside of that triangle scenario shared earlier, we can also have a flat A, B, C up or W, X, Y. So preferably this low is at least an A or a W to start a bigger corrective structure in a 4 if the low is not yet in, right? So, or it isn't. I mean, even with a flat, you don't need to take this low. In a WXY, no need to take the low. Triangle, not allowed to take the low. So it doesn't mean you need to make a new low, but it does mean that you can continue ranging for a longer period of time. So this is your bullish scenario, right? Doesn't matter where you want to put wave 3. The result is exactly the same. Low time frame will let us know what it wants to do. And your bearish scenario is, of course, that your bull market is finished. Doesn't have the highest probabilities for several reasons. But just to name a few, this range over here is labeled a wave 4 of a lower degree, right? And this range of a wave 4 is matching this 2. Now, this is stuff that I have on my other chart, which at the moment doesn't work. But basically, over here, you have 1, 2, 1, 2, 1, 2, 1, 2, 3, and then eventually you have 4, 5, 4, 5, 4, 5, right? This 4 matches this 2. This 4 is shorter than this 2, which is not common on such time frames, so it lowers the probabilities. And second, this move down is very tricky to count as an impulsive structure. If you end a bull market and you want to see a lot more downside, you preferably have an impulsive structure to the downside, a clear 5-wave move, correction, continuation. A contracting diagonal is most common, not an expanding diagonal. That's very rare. Or a multi 1-2, 1-2, 1-2, 1-2, and down. All these three here, low probabilities. We can't count an impulse due to overlap. Multi 1-2 here, that would be 1, 2, 1, 2, but this wave 2 is 11 times longer than wave 1 in time. You can take on a lower time frame, you can take a fib time from the start to the end of 1, double click down here, comparing this move down with this range. Very rare for wave 2 to be so long compared to wave 1. Right? So that's not great in probabilities as well. And the diagonal is expanding, which is very low probability. So in other words, the bulls have a higher probability on the higher time frames. Very nice. And then we zoom in. So on the 1 hour time frame, your bullish scenario is as follows. So a little bit of live analysis again, just because I don't have access to my other chart as Coinbase. It doesn't want to work. It doesn't want to work today. So we have an impulse to the upside in the bullish scenario. Let me just make this a little bit more nice, as a little bit of detail is required. Okay. There we go. There we go. Now, in this particular scenario, we count a 1, 2, 1, 2, 3, 4, 5, 4, 5. Now, this wave 4 is, of course, if we zoom in, we got to count an impulse. This is an impulse in a wave 1 or A. 1, 2, 1, 2, 3, 4, 5, 4, 5. Now, of course, if we would compare this wave 4 with this wave 2, clearly this wave 4 is shorter in time. Now we can take a fib time from the start of this range to the end to then, wait, let me count this in detail again. I know a lot, like just out of my mind, but it's better if I put things on a chart as well, so everyone can follow it. Okay, there we go. Make this a color. We're gonna put this orange. So your white count 1, 2, 3, 4, 5 to finish 1A. Inside the white 3, you have orange 1, 2, 3, 4, 5. Okay, you compare orange 4 with orange 2, right? Now, clearly, orange 4 is shorter in time. So you take a fib time, end of 1, end of 2, end of 3. You can see the 1-to-1 here on the chart. Now, the minimum target for a wave 4 is ending somewhere around that 0.382, right? And that is where this next move started. So minimum target, cool. It's hit. Another thing we have to check, because wave 4 is being shorter than wave 2's, is not very common, but you do have the rule of alternation. And the rule of alternation basically states that if a wave 2 compared to wave 1 is long in time, wave 4 has a higher chance of being shorter in time, right? If wave 2 is very short in time, wave 4 has a higher chance of being long in time. Right? And that is just the time element of alternation. You also have how deep price goes and if it is a simple or a complex structure. But in this particular scenario, this wave 2, if we compare it to orange 1, is about the same time. So here, the 1-to-1, tada. So you can see actually a little bit longer, but your wave 2 is about the same time as your wave 1, right? And wave 4 a bit shorter than wave 2. which in that case can absolutely work. Right? Generally, if you have a fast wave 2, like a zigzag in a wave 2, it tends to end somewhere between the 382, 618 or 382 and the 1, but not after the 1. And if we compare the white count, then you can see that this wave 2, this is interesting, the white 2 is very long in time compared to wave 1, which is literally 2 candles. So 2 is very long in time compared to white 1. Naturally, 4 being short is therefore a possibility. So quite simply, this is your bullish count. No? And your retracement target is the 05 to the 786. That's always the most common retracement target for wave 2, B, X, pretty much anything. And we have hit this area twice now. We do have a support box below on my other chart with a 4-hour order block. Let me show this. So if I go to the 4-hour, then you can see the order block over here, right? We also have the golden pocket taken from the low to the high, also in this area. And we have a daily naked point of control also over here. Plus, just above the 786, we have another point of control. Wait, I might actually be able to show this one. Let's see. Does it work? Go to a lower time frame. Even lower. Maybe not on this chart. Anyway, the PVP on Coinbase does give you another daily point of control somewhere here, around 94K. So we definitely have some support to the downside. And I very much like to see that hit. For me, this still feels a little bit in the middle of nowhere. We didn't even hit the top of this order block, like a simple SR flip. Right? This high here wasn't even touched. We're just floating above it. But we'll get to this in a second. So at the moment, this scenario, by the way, is your higher probability scenario. Probabilities are highest that this is a corrective structure to the downside, increasing probabilities to still take out this high, at least before taking out the low, but taking out the high. So upside has a higher probability. And then internally, if we zoom in here, then there is a... Oh, wait, let me cover the bearish scenario. 1 second. Bearish scenario, we also need the bearish. At least let's cover it. It's not the highest probability, and that is mainly due to this move down looking very corrective. But your bearish scenario is A, after a WXY, B, and then a C for a flat, right? So you have 3-wave A, 3-wave B, 5-wave C. Minimum target for a wave B is the 0.9 Fibonacci from the start to the end of A at 92.4. Most common target for an expanded, or most common flat is an expanded flat, and therefore the most common target is the 1.236 to the 1.38, 88.7, 87.1. Lower probabilities because wave B most commonly is a zigzag family structure, so ABC, WXY, and yes, we can count this as a wave A, right? And then all of this needs to be a B, and then you need a C to the downside. However, time-wise, this wave B is taking a lot of time at the moment. We can take a fib time from the start to the end of A, right? Toggle on a couple of fib times. You can see that we are up here, not even close to the targets for B, and price is already at a 3 fib time, which means that this range is already 3 times longer in time than wave A. It's not something that we really enjoy to see for a flat structure, right? Preferably wave B is shorter compared to wave A. So that increases the probabilities for the bullish scenario, as just explained, impulsive, corrective, and then look for another leg up. At 105, we also have resistance, which is a monthly naked point of control, a daily, and a daily naked point of control. So 105K is, for me, important resistance to the upside, and to the downside around 95 and then 94. That's an important area of support, which hasn't yet been touched. Okay. And then finally, the lower degree time frame count, 15-minute time frame. And then we get to chatting, Q&A, and all that stuff. So the bearish, quote-unquote bearish count first. In other words, take out these lows. On most of the charts, we actually have a double bottom here because this low did not take out that low. And I think it's the same actually on this chart. 1 second. This low is 170. This low is 179. So yeah, it didn't take the low as well on this chart, which is the index chart. But anyway, couple of things to think about here. We did take out, we didn't yet take out the high. So in the morning update that I shared today, there were a couple of scenarios that I had on my chart, right? First of all, 1, 2, 3, 4, 5 in a wave A, B, C, D, E, which would be a triangle. Now, this is interesting. On my Blovin chart, actually, this low took out that low, which would be an invalidation for a triangle. And I'm not sure if on the MACD chart, this high took out that high, or some other charts, maybe Binance. So a triangle looks a bit iffy. It's not really something that's too great. You would then have an A, B, C, D, E. That's your B. And then you look for a wave C to the downside to take out the low. Not really the highest probabilities. Doesn't really look as good. So then we have alternatively here, of course, our W, 3-wave structure. A flat here in a wave X, and then you look for a wave Y. And wave Y, preferably a double zigzag, as long as we do not touch the 0.7 at 100.6K. The moment you hit 100.6K, the probabilities go down for a double zigzag. Right? So you preferably stay below the 100.6K if you want to have a double zigzag in Y, which would be nice. Because a double zigzag is then a quicker move to the downside, right? Can feel quite scary, maybe scare some people out of positions and whatnot. But that would be nice. So you would then look for a flat structure in wave X, which then is A, B, and then you want to finish C. Honestly, it would be good to see price taking out this high, just a liquidity grab, like poof, take the liquidity over here, right? Swing failure pattern, because we have a double top on many charts now as well. So you basically snipe the highs, right? Reject, hit the point of control. 1 second, it's coming. There we go. Hit the point of control here, this red line, right? Point of control just above us, still untouched here, the PVP point of control. You can, by the way, this is an indicator. Everyone has access to this. PVP, just look for it in your indicators. It shows the point of controls. Oh, these are my settings. You want to know. 1 day 70 250. Extend point of control to the right. Style, value area highs and lows are off. Only the POC on my chart. So it would be nice to grab the liquidity, see a move to the downside, grab these lows and touch the support that I am looking for so long, man. At 95 to 94. I just want to see what price does there. At the moment, as it stands, your quote-unquote bearish 50-minute scenario remains a higher probability scenario, which is what I just showed, which basically means still looking for price to at least take out the lows and hit support. As the bullish scenario, the bullish scenario on the chart, is counting this slightly differently and have this as a WXY. This low is your W, and then internally WX zigzag in Y, right? Or your, bigger X, and then this is a Y, right? Double zigzag to the downside, already finished. And then you have 1, 2, 1, 2, ta-ta-ta-ta-ta, and up you go. However, on some charts, as mentioned earlier, if we want to count this as a wave 1, 2 up, some charts, this low took this low, at least on Blovin. That's an invalidation for an impulse. Secondly, on the charts where it didn't happen, we touched the 886, which of course is a very, very rare target for a wave 2. So it lowers the probabilities that this low is a wave 2. Because of, now I won't talk about the 886 in detail at the moment. So just about a wave 2. So in other words, probabilities are low that this is a wave 2. In other words, probabilities are low. This is a wave 1. This is 2, and we are working on a wave 3. That's the only information you get with the 886 touch here. Now, can we, in some way, shape, or form, end a corrective structure at this low, where this then becomes a wave 1, 2, and a 3 to the upside? Now, that is tricky. It's not easy to end something at this low here, right? Now, we have, of course, several corrective structures. So for the sake of simplicity, put them on the chart. We have the zigzag family, we have the flap family, the triangles, whoops, hello, and the WXY. Now let's, oh damn, there we go again. Zigzags, flats, triangles, WXY. And thank you, there it is. So if we run through them one by one, right? Zigzags, well, we can't count 5, 3, 5 because then we end over here, which isn't allowed, right? Or, wait, it's allowed, but probability-wise, counting this as a 1, 2, low probabilities as just explained. So preferably, we end something here. Now, this is not A, B, 1, 2, 3, 4, 5 diagonal, right? We never made a 4 and a 5. Doesn't work. So we need to look for a double zigzag. Okay, W, X, and then a wave Y. But wave Y should move below wave W, which it didn't on many charts, including this one. This low is actually higher than this one. So again, very low probabilities. You can finish some sort of a WXY here. Okay. So, and then we have triple zigzags, which at the moment is irrelevant besides being very rare. And now, then we have flats. Okay, flat A, B, C. We never got a B. We never went all the way up here to create a flat wave B. So that's irrelevant, right? So zigzags go out, flats go out. If you are relatively new to counting corrective structures, I always recommend to put this on your chart. Zigzag, flat, triangle, WXY, and just run through them one by one. Right? Now then we have the triangles. Right? How can we end something here? Well, triangle, A, B, C, D. Oh, you know, on some charts, D took out this high, which isn't allowed. Right? A, B, C, D, E. And on the charts where this high did not take out the high, this would then be D. Oops. We need an E. Right, let me, A, B, and then this is C. Now, in this particular case then, your wave A, preferably simple zigzag, so it has to be a 5, 3, 5 zigzag, base B zigzag, C zigzag, D, whatever is going on here, zigzag. And then, of course, we want wave E, preferably a zigzag to the downside. Taking out this low here, that one, invalidates the triangle. So in other words, you would still continue the correction as explained in the morning video as well. Or wait, not this morning, yesterday. But this morning I wrote, it is unlikely the correction is finished, right? Because even in this scenario for a triangle, you would still look for at least one more leg to the downside. Mind you, by the way, that a triangle is not allowed in a wave 2 of an impulse. So in other words, if you get a triangle, you cannot count 1, 2, 3 here. You're going to count this A, B, C, which is quote unquote bearish because after wave C, you again look for a move to the downside. So in this case, we then look for a 3-wave structure down, create wave E, not allowed to go below the lows here. There's one problem that I have with this scenario, and that is that it doesn't touch the support that I have at 95, 94. It's still floating here. I don't know. Also, of course, on some charts, wave C did take out the low of A, which is an invalidation, but on many charts it didn't. It got very close, but it didn't. So it's not ideal. And then we get to a WXY, which is the complex structure explained earlier. WXY, it would be great to actually take out the high, which invalidates the triangle then. But grab the liquidity at the high, move down, take out this high, hit that point of control, just to put it on the chart again. 1, 2, 3. Hit that red line, take out this high, move to the downside, hit that red line, and then go back up. That is at the moment what I am looking for, quite simply. And if price is going to move above this high, then a double zigzag WXY is invalidated. In that case, you then move to a WXY, which is a sideways corrective structure, or not invalidated. If you hit the 0.7, it just really lowers probabilities. So I will switch. The moment you hit 100.6K, that is the moment when you then look for a more sideways approach, WX, And then because W is a zigzag, wave Y is then preferably a flat or a triangle. But double zigzag would be nicest. So grab the liquidity, hit the point of control, move down, touch support, and then go back up. So out of these options, right, a double zigzag, which by the way is a WXY by itself, but so let's then do this. So WXY, either a double zigzag or sideways still works. Flat doesn't work. Also, this now becomes too long to get a flat. And then we have the potential of a triangle, but in some cases, on some charts, it's invalidated as the low here got taken, and on some the high here got taken. So that is not great for triangle probabilities. So a WXY is what I favor. Yeah, and then to the downside, I just see it in the corner of my eye. The target for a wave Y is pretty much the support that I look for. Let's see if my Coinbase chart wants to work now, because then I can actually show it. Okay, it's back to working. At the beginning of the stream it didn't, but here it is. So I'd be looking for 94.9, 95.6, and just below there, point of control 93.9. In a sideways combo, W or Y can be a zigzag, yes. But if in a sideways WXY, wave W is a zigzag, wave Y cannot be a zigzag. That's only allowed in a sharp double zigzag WXY. So that is the probability. So just to summarize, because I basically covered everything on a chart where I didn't have the analysis, right? So I was drawing a lot. But on the, hopefully this chart now actually continues to work, so we don't have problems here. Let me check, switching time frame. It works, thank you. Tradingview. On the daily time frame, probabilities are highest. We are still looking for a wave 5 to the upside to finish the bull market. That would be your final impulsive move to the upside, right? On a weekly even, you would look for 1, 2, 3, 4, 5. And in this weekly 5, you then internally have 1, 2, 3, 4, 5 at the moment, right? There is definitely high potential, at least, for this to be a potential end. Maybe you get another 4 and then another 5 towards the upside, right? Go a little bit higher again. But in other words, you are now reaching territory of 4 5s, right? And 4-5 territory is always tricky. Right? It's not always easy to get to the exact high. So every new high that is going to be formed after this range especially is a potential Bitcoin bull market top. And then the range afterwards, that range is going to tell us if we get another leg or if we fall. In other words, if this range is corrective, being either a zigzag structure, a flat structure, a triangle structure, or a WXY structure, we look for price to move up. If this over here is going to be an impulse to the downside, we expect a correction and deeper continuation, and then down we go. I don't know which live stream it was, but in a recent live stream, I basically covered how I go about trading such potential tops compared to how I trade potential bottoms. But basically, in a very simplified way, whenever I'm able to count 5 waves up here, I'm definitely looking to sell, happy selling, look for the next range. If the range is corrective, back to buy. Oops, that's the wrong chart. Can I Control Z this? Yes. And if the range happens to be corrective, which of course we count here on the channel, then I look to buy again. And then I look for a next leg up. Next leg up finished after 5 waves, sell, sell, sell. Wait for a new range to form. If corrective, buy, and look for the next up. And basically that's how I approach tops, because holy moly, I don't want to be on the wrong side of Bitcoin topping out and then bear market starting, right? So, how often do you read the stories of, I had such a good position and I ride the bull market, and before they know it, they're minus 50% on their account, and they're like, oh, it will bounce again, no worries, boom, minus 70%. bear market. Oops. Oh yeah, well, yeah, now I have to hold it anyway because, you know, I don't want to be that guy. So probabilities on the daily higher to still look for upside. Invalidation out of my head is 74.6K. But preferably you do not really move below this range at 85. That would be maximum support. If you go down here to the low 80s, would not be great at all. So preferably we just stick here around that 90 to 110, perfectly fine. And then start wave 5. Locally here on the 1 hour chart, probability is higher. This is impulsive, corrective, looking for another leg up to take the high. I would favor testing 95, 94K. Look for support in this area, signs of strength, a bounce, bullish CVDs, flipping resistances back into support if price does hit support, right? And then look here for your signs of strength. No? That can be interesting to look up. And then the resistance that I keep an eye on is 105. And on the 15-minute, which is basically this structure here, probability is higher to still hit support. Like, damn, man, how long do I have to wait for price to hit the box? Maybe we will never, but it doesn't happen often that price is not hitting my boxes. So it would be rare. So I definitely favor price actually touching it to observe the reaction. And yeah, that is it. Probability is higher. This move down at the moment is corrective, not impulsive. So 1 hour looking for the high, but more locally, it would honestly be nice to take the lows and touch support. So yeah, daily 4 hour bullish, 1 hour bullish, 50 minutes. I mean, just test the support, man. Please. And that's it. That's it. Very nice. Okay. With regards to news, by the way, let me refresh here. Friday, right? Today, calm day, so to speak. But Friday, tomorrow, might have some increased volatility on the chart. So you got some high impact news at 2:30 and 4 p.m. Central European time. So trade safe around that time as it can increase the volatility on the chart. Okay, I'm gonna put the relevant things on my chart here. Anything else? Nope. And then we get into chatting and Q&A. Nope. Okay. We started at like 15 minutes in. So let me, for the newcomers here, write down Elliott wave analysis at 15 minutes or something. Now chatting and Q&A. I use different charts with different prices. I want a way to get exact price of boxes. Wait. Ooh. Replace. There we go. Yusuf, I mean, you got to have basically if you use different charts, you're going to have a box per chart, right? So if you trade Bitcoin, you'll have different SR levels compared to Ethereum, Solana, Doge, etc. Thank you, Gwillian. 15 should be around that time. Should be good. Thanks, man. Yeah, you want to have boxes per chart, basically. It's difficult, of course, to summarize. Like, you can't combine a Bitcoin box with an Ethereum box. Now, if you do Ethereum Elliott wave analysis or Solana or Doge, and it has confluence with your expected analysis on Bitcoin, and you have for example, we have a support here on Bitcoin at 95. Now, imagine that on Doge, you have a support somewhere below price as well, right? Maybe Doge, I haven't checked the chart, but is ranging sideways as well, right? Imagine that below this range, you on Doge also have support. Now, that's like confluence between charts, so to speak, right? But you got to have different boxes. So yeah, let me have a quick look up here. What happened? When it closes, it shows you X's or V's. How do you put lines on the CVD chart? You got the template, or unless you develop it yourself, but you can just download the template in Discord. So these lines, these ones, right? These lines here. There is a simplified template in Discord. 1 second here. Open Discord. You go to the Good to Know channel. Up. Good to Know channel. And then you have AGGR link. Templates. CVD one pager. That, by the way, let me say this very clearly. Koen Schobbers created this. There tends to be people online. I actually noticed, I think 2 months ago, thanks to a member in Telegram, that there are some other channels that are selling my free developed for all of you guys CVD indicator. They are selling it in a subscription, and they screenshotted this one pager, but they cut out the side and the top with Koens, and they only use the absorption here table. Like, what the fuck, man? No, I'm gonna sue their ass. Like, I'm telling you. Once my lawyer is up and running, which I now have in France, it's gonna be fun times. So anyway, that is with regards to CVD. What's up, Skywalker MP? Welcome. You can count a zigzag from the all-time high. You don't need it to be an impulse or diagonal first. Yeah, but if it's a zigzag, probabilities are not higher, it's impulsive, right? You need at least wave 4 and 5 of a diagonal before you're going to turn bearish after a zigzag down. The moment you have a zigzag down or a zigzag structure down from an all-time high, this is bullish. Only when you then have this as a 1, 2, 3, 4, 5, now this is potentially bearish, because then you look for 3 continuation down, right? As long as you only have a wave 1, counting a diagonal is completely irrelevant. Also, if we have a zigzag looking structure down, preferably for the bears, you count it as a 1, 2, and another 1, and another 2, and then you look for a 3 down. That's your most bearish scenario. Instead of counting a zigzag, count a multi-1, 2. If multi-1, 2 has low probabilities, then the next option is going to be your diagonal, but then you need to wait. So it takes a lot of time, in other words. So the probabilities after a zigzag are never highest for bearish scenarios. If it's a zigzag, of course. An order block. Well, on the 4-hour time frame, right? Basically an order block. So we make the low. Do I have a video here of? No, I have it in gold. Gold has an order block video. So, but just in a nutshell, how to recognize it, I suppose. So we made a low, price moves up. In this uptrend, there's one red candle over here. So it's like a little bit of a break in the uptrend. And this place, right, we call this an order block. So price moved up. People here selling, well, it's a red candle, so whatnot, taking profit, selling, all that good jazz. And then price continues up, preferably, and everyone may have a different definition or how they trade order blocks or whatnot. But what I like to see is an order block in the middle of a move, and after an order block, we continue quick, right? It's a quick move. It's not like, that's not what we want, a quick move. So this is interesting support to the downside. Let me see if interesting support, right? If price comes down. Let me see if I can find some other 4-hour time frame examples. So arguably move up, red candle, right? And then you again move up, test, order block, continuation. Can I find a bearish one maybe? I mean, a daily, is that a daily one? No. Preferably it's also a one candle move, not in the middle of a range. So range, and then you have one candle and then you go. But it's preferably you look for, oh, that's a good one. One candle in a move, one candle, support. That's nice. Not like a whole range and then, oh, there's one green candle. You know what I mean? So, and of course, it's a place where people buy, people sell. But in that case, the order block we have here, let's say take profit or selling area, right? People that are underwater, they want to get out. Other people here want to buy during the retracement. It's a good area. This would be an order block as well. We never reached it. So right. You get the point, I guess, no? Look, by the way. Wait. Compare the current chart with what we see here. Interesting. Let me actually compare this with bars pattern. Do this. Oh, I got to move to the 4 hour. That's not as nice. That's a bit meh. Okay. So we have that. I mean, you get the point. And then, of course, preferably we still touch support in this case. But yeah, same order block than 49K low. So yeah. Ben Positive. You are the greatest wave nerd I know on the net. I take it as a compliment. Can we use PvP too? I actually don't know. I got to PvP because of Rejo in Discord. I haven't checked any others. I only use PvP here. So yeah. WXY. Yeah, Ivan. I would agree there. What's up, James, man? 2013 double top, 2017 one top, 2021 double top, or one top. Too little data really about all-time high creations on Bitcoin specifically, though, to really look into that. But let me double check here. Oh wait, this is Coinbase. Let me go to index. Let me go to the daily, I suppose. And then you say 2013. Can we go back all the way? Yeah. 2013, double top. Oh, wait, this is 2011. This for me is very much a single top. But maybe you talk about this one here. This is the index chart. Ooh, that's an 886 touch even. Nice. So that's indeed, that's more like a double top formation. I would agree. Then you have 2017. Yeah, this is of course nicest and also clearest. The moment you hit an 886 at a high in a bull trend, you would prefer to take the high again, which didn't happen in 2013. This is much more clear as the end of a bull market. Sharp move down, 3-wave corrective move up. Like the moment you come back down here and you touch this 886, just for the sake of education here, if you see this, maybe we're going to get this, who knows. A quick move down, no problem, right? Like, okay, here we are here at like almost 20. You go down almost 10K, right? Got to bite the bullet. You don't know when the drop comes. You're just upping with the trend and ta-ta-ta-ta. Probably we can count this in detail, of course, right? And make sure that we are looking for a wave 5. So we expect such a move. But if you don't, take the L. Price always bounces, right? Where does it bounce, by the way? On a red candle. And then this is a very clear three-wave structure to the upside. So the moment that price touches this 886, that's not so good. Oh, actually just missed it there. This is the index chart, so I don't really know how it works on others. But it almost did, which isn't that great either. But you're having a move up, move down, move up. Bullish scenario here would be counting a 1, 2, 1, 2 up. Now, the moment you touch that 886, higher probabilities it's corrective, probabilities higher to take the low, bare minimum, continue ranging sideways. But at least you know, after seeing such a structure, changing market structure, three-wave move up, we'll be able this cycle to, of course, go in lower time frames. But in my case, I'm already out. If I would count this as just explained, right, impulsively, 1, 2, 1, 2, 3, 4, 5, 4, 5, and also on the lower time frames, if this is where we are now, right, and I count 1, 2, 3, 4, 5 up, that's where I sell. Wait for a new range. If corrective, buy. Look for 5 waves up, sell. If range, corrective, buy, and then next high. Anyway, next stop. 2021. For me, this is a single top. Double top would be a lower high. This for me is just a single one here. This was also actually quite nice. Yeah, not enough information to talk about is this going to be a double, is this going to be a single? Because if you want to build data and statistics on this, you want to have a big enough data, like a pool of data, which we don't have because there's not enough bull markets. So with regards to the alts, I am considering doing an altcoin channel. I'm just struggling a little bit from a time perspective, but I'm thinking about it. The color of your candles. This one is gray. I don't know which gray it is. It's one of the pre-made grays. And then orange or brown is this. You can just stop the stream and check the code. Is the price action after February 3rd impulse not too long to be corrective? After February 3rd, you take a fib time from the start to the end. Toggle on fib time. All right. We are currently ranging at a 3. So yeah, 3 fib time definitely starts to be on the long side. Yeah, if of course that's a low or we get the triangle, for example, but it's not touching the support, that would be a bummer. I mean, I am prepared for anything really, but yeah, we are at a 3. Still no problem. We still have like the 5 is on the 8th of Feb, 6 is on the 9th of Feb. Don't forget the wave 1 and 2 at 49K took a while, but yeah, it remains very tricky to count this as a finished structure unless this is a WXY that's finished, right? That's my favorite, would be a finished WXY, but then you have a 1 and a 2, and 2 touch the 886, and on some charts it took out this low, which is a bit, it's not great, but it didn't on this chart, it didn't on Coinbase, didn't on index. So on most charts, this low did not take this low, which keeps a bullish scenario alive of 1, 2, 1, 2, and then of course you want to go up, which is perfectly fine. I mean, the probabilities are still higher on the 1 hour to take out the high. It's just that a wave 2 here touching an 886, you know, double bottom basically. It's of course very rare. So it's very difficult to give it the highest probabilities unless we start pumping, but then, you know, probabilities play out anyway as probabilities are higher to take the high. But from a corrective point of view, it would be nicer to touch support actually. But yeah, upside of course is on the daily time frame, on the 4-hour time frame bullish, 1-hour time frame bullish, and on the 15, it would be nicer Elliott waves if it would actually create a bigger corrective structure. just purely because you're 886 touch here for a wave 2. I mean, it's not great. But it happens. It's never 100%. The 886 for a wave 2 is a very, very deep retracement. And it's very rare for 2s to hit it, but it's not impossible for 2s to hit it. So you just got to be prepared, no? So yeah. But yeah, around the 3-fib time. Still have a little bit of time, but if something happens, preferably let it be quick. Yeah. We're more likely larger corrective structure down. Yeah, but that is of course still bullish. So even if you get a zigzag, of course a zigzag can become a double zigzag, but this is still bullish. Can be a triple zigzag, right? But that's still bullish. So the moment you get a zigzag, the main directional bias is always going to be bullish, unrelated if the correction is going to extend in time. But the bigger directional bias will be bullish unless you turn into a diagonal. Cheers, MT. Welcome, man. Cheers, James. Can yearly open be seen as support? Absolutely, yeah. Anything can be seen as support or resistance. Depends on what tools and levels you like to use. Yeah. Where do you think can around 50K? It doesn't seem to be working. Wait, the Discord link is not working? Interesting. So what's one of these links is in the description, I bet. Other people can join, but if for whatever reason it is not working, feel free to join Discord here. Yeah, same here. It would be for like an altcoin stream or altcoin channel. You should still take a look at the Wyckoff. It plays out really nicely. Yeah, Wyckoff, of course, like Wyckoff, Gun, Elliott waves. Great information to have. Harmonics can be cool as well. Not really a big Wyckoff guy myself. I don't even really know the pattern. I just count it from an Elliott wave point of view. So, but yeah, if you can learn those type of analysis, and it can support potentially Elliott wave counts. Yes, but yeah, I might have a look at it. Not really going to study Wyckoff, but can be interesting to put a picture on my screen and compare. What can say about ICT concept? No experience with that at all. For some it will work, for some it won't. Likely generate no DBB, and that is because the 886 touch here that is made at 91, right, is made after a significant corrective structure. You always want to pull an 886 from the beginning of a structure. So this low can be a wave C, can be a wave Y, and if this is a wave Y can end very deep, but not take the low. Running flat ABC can end deep, not take the low. Triangle ABCDE can be deep, not take the low. In other words, the 886 taken from this low to the high is not relevant for the probabilities to take out the low. The only thing it tells you is counting this as a wave 1 and 2, very low probabilities. Right? The only 886 at the moment here that would be relevant is from this high to the low and from this low to this high. Yeah. And even the 886, and that's from the low to the high, by the way, is only relevant to know if this can be a wave 1 or not. And from the high to the low, that one is relevant. If you do touch the 886, probability is higher to take out the high. So it's a different use of implementation, I suppose, of the 886. We definitely have some volume coming in. What a crazy structure this is to the upside. Let's see. What's the retracement so far? A 0.382 retracement. It's a minimum retracement at least for a wave 2. But if this does shoot up, 1, 2, 1, 2, and if you do get a 3 up, you're at least going to be looking for 4, 5, 4, 5 minimum. So then you have 1 long 2, 1, you get a 2, 3, 4, 5, 4, 5, and that's then your impulse end. And in that case, we would miss out on touching support below. Would be a bummer though, not gonna lie. Oh, sorry, Joe. Look. But I am essential on TradingView. I'm not a premium user. So it should be able to work. Yeah. Cheers, Victor. Yeah, I'm considering it, but it's just time. Yeah. Can you please count the last move up in the 3-minute time frame? 3 minute is very low for Elliott waves. That is stuff I generally like to stay away from. I'm not a big fan. So 1, 2, 3, 4, 5, A, B, C, flat, 1, 2, 3, 4, 5. That's as I don't like to count this in detail. That's a very quick glance, but I'm not a big fan of such low time frames. I rarely ever go below the 15 minutes, which is already on the lower side from Elliott waves. But the 15 minutes, I can easily count the 15. Trading wise, I really enjoy 1 hour, 4 hour, 15 maybe for more like lower time frame entries. But yeah, 3 minute and stuff. Generally, I stay away from such low time frames. What's a typical wave 2 retrace? The 0.5 to the 0.786 Fibonacci taken from the start to the end of wave 1. I can't find where. Yeah, I don't know. Like other people also had their point of control at 93. I don't know. Mine is at 95.3. I don't know why that's the case. I got it from my Altas template. In Discord, got a couple of questions about it, and I don't know where it comes from, but it doesn't really matter as the areas of support to the downside. You have the order block. I have a point of control here. Golden pocket, and below you have the point of control at 93.94 here. So I mean, in both cases, that's your area of support. So it just basically like includes the daily naked point of control, I suppose. 93.6 is just below, but yeah, you know, the area is the same. So yeah. Low is taken on Binance chart as well, so I don't think it's an upward 1, 2, 1, 2. Yeah, now I'm not I don't enjoy an upward 1, 2, 1, 2. On some charts, the low is taken, on some not. Right, that's already a bit meh. You know, preferably alts align, especially the bigger platforms. So if you get a wave 2, then you know you don't actually really want to see wave 2 taking out the start of a wave 1 on any of the bigger platforms. So yeah, and then of course you still have then your triangle opportunity or your WXY. Triangle is also of course not great because then your C moves below your A. It's an invalidation. I would personally still like it if price can take this point of control, grab the liquidity of this candle over here, and then come down to touch support. Now it is of course being, you know, it's a longer range, but yeah, it's just would be nice. But yeah, you know, what can we do? Probabilities daily bullish, 4 hour bullish, 1 hour still bullish, but on the 15 here, I wouldn't mind taking out the lows and hit support. I wouldn't mind. I mean, probability wise, that would be higher probabilities because counting this as a 1, 2. Counting this as a WXY, well, on some charts you took out the low, on some others you didn't. For a Y, you need to take out W and a WXY sideways. This can, of course, still result in an A or a WX and a flat in Y. It's also still an option. But you're going to move into complex structures. If you want, I could do the analysis for alts. You can always write me a DM, but before I would, that's almost like an Elliott Wave International concept. Before I would have like a separate channel with, for example, other analysts covering charts under my name, it will take a lot of checking, testing, and stuff before I would have people analyzing under my name, because there's a certain quality that I expect, which of course is very high. And if that quality is not reached, then there's no way. I'm not thinking about other analysts yet, but if in the future eventually you get a bigger team and whatnot, then what I will have is very likely I will have some sort of a like a test. Yeah, there's going to be like a test. I mean, look, Elliott Wave International, it's interesting because as much as people say like some people think they're the founders or they're like the owners or the license, Elliott Wave International is literally just a company. It's just a company. Elliott Waves is public domain. It's just a company that started in 1979, I believe. 79 or 89, 79, I think. And it's just a business set up by Bob Prechter, great guy. I have news about him soon, by the way. Linked to myself, of course. And it's a business. Like the SEWA certification, right? Certified Elliott Wave Analyst certification is literally just a business product, right? They have created a level 1, 2, 3 and master, right? So of course, three exams, and then if you take them all very well, you have the SEWA M certification. But it's just a business. So it's not a license. It's not a university. It's just a course. And if you are very good in the course, you get a certain certificate, which you can show as a sign of knowledge, I suppose. But the amount of, like, how can I say this? The business decided what is low, medium, and high amount of Elliott Wave knowledge. And you basically do the test, and then you either are like 1, 2, 3, or M, basically. But anyone in the world can create a certification. Anyone in the world can create tests, can create levels, can create everything with regards to Elliott Waves, which is very interesting. And if I would eventually hire other analysts that would do certain things under my name, I would let them go through my own personal made whole educational whatever stuff, which is much more in detail than Elliott Wave International, as it will, like the compendium, it will include time, it will include volume, it will include all the structures, it will include all the targets, all the retracements. It will be incredibly detailed because I want people to be on par, right? And if they cannot be, then yeah, not too interesting. Pleasure, Victor. Have a nice day, man. Since June, July. Been here for a while already, no? Can you put 5454 in a channel? Yeah, I mean, you can, but it's not an Elliott Wave related channel. So you won't pull, generally you don't pull a 4545 channel. Wave 5s can sometimes also be very long, and then they just break out of the channel compared to a lower degree wave 4. So, for example, just low time frame, but if you count, 4, 5, 4, 5 here, then yeah, well, I can pull a channel here, but this 5 extends out of the channel. It's not an Elliott Wave channel, right? It's not a base channel, trend channel, or an end channel. Every time I catch a top or bottom, price move in the right way, but it became correction, not impulse. In my question, how to avoid entering in a correction? This is more a question about trade management. First of all, you're doing very good in trading a high or low, apparently, if you are able to catch those highs and lows with success. And I think that based on your strategy, if it works, you should continue to do it. And if you notice it's a corrective structure based on your analysis, you just have to manage it differently. So you just take profits a lot quicker, you take more profits, or you close quicker. Because there's going to be a time where you just follow your plan and strategy, you manage to grab another low or high, but it's an impulse this time. And that is when you can have a runner. So people, and I think I made a short about this not too long ago, but you have, of course, a certain group of people that have the mindset of, I want to catch that one big runner. I want to catch that one trade that is going to make me millions, right? And it will hurt their risk management because they enter a trade, they hope that is going to be the one. And they do not manage it correctly, maybe don't take profits, they wait too long and la-di-la-di-la, like, instead, keep doing what you're doing, wait for the structure to evolve. If corrective, manage it differently. If impulsive, consider letting it run, because it might be a runner. It can still be a zigzag, right? And then after a zigzag, you'll get another range, and then you'll figure it out. But at least there is the potential of a runner. Also, do multi-time frame analysis. So if on a daily or 4-hour time frame, you are looking at ending a corrective structure in a bull market, and you manage to snipe a low, that low might be the end of your daily wave 4. So it might, there's a higher chance of you getting a bigger runner if you can have a scenario on your chart on a 4-hour daily, weekly time frame that ends a corrective structure. So if you end something on the daily, or you're close to ending a daily corrective structure, you snipe a low, there's a higher chance of that becoming a runner, as the daily correction might be finished and you might be looking for a daily continuation. By the way, Adam, welcome, man. I just noticed your name. Like A+ certification. Yeah. I mean, any type of certification that businesses give, yeah. How to avoid the wave B expanding flat trap? Time is one element. So if you have a impulse to the upside, right, and the first leg down is very short compared to your move up, right, the probability, generally a wave 2 most commonly, right, ends after the 0.382 at least. So if you get a zigzag down, which finishes before the 382, and then you do this and you move back up and take the high, you got to be very aware of a flat, because this low was made before the 382. So probabilities are higher now for a corrective structure, make another low later after the 382, and then continue. Second, if you get a flat, right, 3, 3, if the zigzag is sufficient, you may not know if this is the end of a correction or not. All you know is we have a 5 move up. We get a correction and another 5 move up. This second move should be a wave 3 in an impulse. So this move should have the highest volume, extends to preferably at least the 1.618 trend-based fib extension taken from the start to the end of wave 1 to the end of wave 2, right? And internally, 1, 2, 3, 4, 5, right? You should just end quite high. Now, for a wave C, and preferably actually you pass the 1.618 extension, in an ABC, right? Your wave is C here. Common target is the 1 to the 1.236. The 1.618 is less common, right? Still a target, but less common. If you pass the 1.618, think wave 3. If you can count a finished 1, 2, 3, 4, 5 wave structure in the 1 to the 1.236 area, you got to be very aware of potentially an A, B, C. Alternatively, this is going to be a 1, 2, 1, 2, 3. But you don't know if that's going to be the case, because the retracement, if impulsive, look flat. If corrective, look for another move up. But trade management-wise, this would then be a selling area. You wait for the range. If the range is corrective, buy again and up. If the range is impulsive, well, perfect. You sold at the tippy top. So, yeah. And of course, a wave C should be a completed 1, 2, 3, 4, 5 wave structure, while a wave 3 preferably extends, and you have a bigger 1, 2, 3, 4, 5. Right? Up, 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 up. Okay, just do that. How are we doing here? Okay. Cheers, Particles of Time. I used ChatGPT and it said zigzag down have no probability either way to be bullish or bearish due to the fractal complexity involved, but ChatGPT is often wrong. I mean, yeah, I don't know how much actually ChatGPT knows about Elliott waves, but a zigzag is always a bullish structure unless you get a diagonal. But that a diagonal only gets the highest probabilities after you complete basically the diagonal, right? So, Sibel, welcome, by the way. What's up? Driftaholics, exactly. Bend positive. For how many percent did you already step out as we have a possible potential 5 ways up? What time frame are you talking about, Ben? But generally, with how I manage my high time frame stuff, yeah, I manage that for myself. I'm generally not very public or open about the management. I just explain how I manage it, but I don't really go in detail with sizes, percentages, and because that is a personal preference. Some people are very comfortable taking 10% off, and others will take 50, 75% off, and then they try to add that again if proven corrective. They just add and then look for price to continue. So I explain my approach, but I generally don't explain the details because it's personal. It's just everyone will have a different number in mind. I think it will also depend on your level of analysis. How good are you in finding a new opportunity, and how good are you in being able to recognize if a range is corrective or impulsive? If you're very good in recognizing, okay, this is corrective or this is impulsive, it will really help you in managing positions. In other words, if you're good in recognizing this, it makes sense to take more profit, wait for the range, if corrective, and as you know, you're good in analyzing and you're able to recognize the corrective structure. The moment a corrective range is basically your highest probability and is practically confirmed, you just look to add again, right? You don't need to, you can exit, price moves up, 1, 2, 1, 2, 3, 4, 5, 4, 5. Okay, we take out this high, cool, we're looking for a 5, press the sell button, sell 75% of my whatever, right? Now, price might continue up and then continue a range here. Doesn't matter, right? Doesn't matter. You got to be comfortable not being part of a move. Eventually, you get a range. Yeah. Now, we analyze the range analyzed, right? And once a corrective structure has a higher probability, you just enter, right? Unrelated really to the position. Maybe you want to snipe a position. In my case, though, the moment probabilities are higher, something is corrective. The moment that happens, I just enter again. Not really trying to snipe the exact. Now we're talking really swing trading or stuff. I'm not really trying to snipe an exact low or something. But of course, with trades, that's different, like active trading. But if you are not very good in identifying corrective or impulsive ranges, right, or finding new opportunities based on Elliott waves, you might be able to, or you are likely to manage differently. Yeah. Maybe you take more out because you're not really sure, right? What's coming up because you don't have the skill yet. Maybe you take less out. Yeah. But I think if you're very good, it makes more sense to take more because you have a higher chance of analyzing correctly and adding when needed. Which means that once the drawdown comes, you will have less percentage loss. You just wait for a range. If corrective, add. If impulsive, well, you exited at a better moment with a higher amount. What is smart percentage age-wise? Ooh, I once... this is like, what's the stocks versus the bonds question, isn't it? Like, which there's like this investment, not like advice or something, but it's like based on your age, you take a certain amount of risk. The younger you, it's like, is it 100 minus your age? So if I'm 32, then I can put 78% in stocks and 32% in bonds or something. Was that like the thing? And then the older you get, the more the percentage switches to the bonds as it's safer. Is something going on? I think it was something like that. Maybe more, like other investors may know exactly here. But with regards to crypto, age-wise, look, if you are younger, you can take more risk because you're not like, I'm 32. I'm in a high risk age. I think. But if I would be 60, I would definitely put less into crypto. Now you might be a full crypto believer and all that jazz, but it's still a volatile class, and maybe I'm a bit traditional in that sense. I enjoy crypto fine, but at my age, I can take more risk. I can put more into volatile assets, volatile stocks, volatile whatever. But turning 60, it will be the other way around, because at that moment in time, it's more about making sure that it's security, the pension, everything being paid off, less volatility in your portfolio, and so yeah. So an exact percentage, it depends on your own age and risk. In my opinion, I'm 32. I'm like, I always say I'm high risk. I don't care about. So this is not trading. This is of course investing, but I don't care. I don't care if I lose or not, because I'm like, well, I just earn it back again. But if you're 60, it's different. If you're it's not the same. Mm-hmm. So New York is open, but it's been a bit slow now. It's also how long have we been live for now? 1.5 hours. It is time to start calling it a day, though. Very slow price action, and then you'll see after the stream, things get nutty. But what's up, Oku? Welcome. So okay, yeah, it's we've covered a lot. Just to summarize the probabilities, and then I'll continue with actually creating my bullet journal. But on the daily and the 4-hour time frame, probabilities are higher that we are 4, still look for 5. On the 1-hour time frame, probabilities at the moment are higher to take out this high. In other words, the bullish scenario. And on the 15-minute time frame, the probability, it's very tricky to end a corrective structure at either of these lows, as explained in the analysis. So preferably, we still move down, take the lows, find support, and then take it from there. It would be the absolute ugliest 1-2, if that's a 1-2 and another 1-2, because on some charts, this move below this low here, move below this one here, which isn't even allowed. On many charts, you hit the 886, very rare for 2, not an invalidation, but taking the low is. what did we have? The triangle A, B, C, D, E, but then in some cases C took A, in some cases D took B. It's both not allowed. It's also not great. So yeah, I'm definitely keeping an eye on a WXY. It's a long corrective structure in time. That's the only thing that is meh. Well recognized by someone in chat earlier, but we already passed a 3 pip time. So for a correction against the impulse, quick impulse up and then a longer corrective structure. As long as we are not at 5-6, that's fine. But if we, in other words, if we want to test this support, it better be soon. Today is the 6th, 7th. Yeah, I mean, either today or tomorrow. If you do move down, you want to test this either today or tomorrow. Like after a 4, I preferably we don't do it in a 5 or 6. Alternatively, of course, you just move up. That's fine, as the 1 hour probabilities are higher to take the high. It's just that on the 15, it's a bit tricky to count a nice ended structure here. But sometimes we get price touching support and sometimes we don't. It would be nice if it does, not gonna lie. Because for me, the lows here, it feels a little bit middle of nowhere stuff. But anyway, that's your probabilities. So yeah, very nice. Thanks everyone for being here and checking the live stream. We've covered the daily 4 hour, 1 hour, 15 minutes. And yeah, probabilities are clear. Blue box decision tomorrow. Yeah, maybe. I wouldn't. So, I wouldn't mind price just first taking out the point of control here, just above us. Grab the liquidity at the double top. And then reverse quick. Like it should be a quick move. So basically, it's like a WXY, but a flat. So you have this, that's your W. This, that's your X. And then A, B, boom. C, right? Flat. It's a sideways WXY instead of a double zigzag, which is allowed. It's not like you have to retrace a certain amount for it to be sideways. But you have a double top here. You can grab the liquidity, point of control, drag it down impulsively, create your wave C, hit support, and then you go back up. And then, I don't know, by the weekend, what day is it today? Thursday. We don't have a lot of time. So preferably before the end of the weekend, we move out of this range here. And then we range somewhere else. Bitcoin always ranges now. Okay. Thanks, everyone. I will catch you again at the next one. So thanks for being here. And yeah, thanks for watching. Have a good day. Have a good night, afternoon, morning, wherever you live in the world. And we will be seeing us again.